and I was hearing some double music in there. I don't know if it was just reverbing in my head. I have no idea, but we are here live on our Tackle Trading halftime report, our daily stock market, commodity market, Forex market, our market show where we break down the news, the price action, anything on our mind. We try to have some fun while we're doing it as well. Welcome out, Team Tackle. A couple things as we get started. Number one, if you are new to our channel, subscribe and leave us a comment, participate, be a part of what we do here on a daily basis on our YouTube channel. We go live on this show every day, 12:30 p.m. Eastern Standard Time. Click the subscribe button and click the bell so that you're alerted of it in the future. And if you are a new member of our channel and you're not a pro member yet, we are offering always standard offer a 15-day trial of our pro membership at Tackle Trading. That link is always in the comments below, and Cody will usually drop it in the chat as we go. Morning, Matt. How you doing, brother?
Doing good, Tim. Excited to be here with the crew to break down the market action today.
Central bank action is really the story. And if there's one person I'd want to hear their perspective on, it'd probably be you when we talk about central banks. I mean, you geek out on interest rate policy. There's no doubt about it. We've had 3 central banks in the last, maybe even 4 in the last 24 hours.
Turkey, you had Brazil too. So you had some emerging market central banks, and Brazil and Turkey went, dovish. If you can go more dovish, Turkey just did it. And obviously there's a lot of concern from an economic perspective with the emerging markets. I mean, the emerging markets are an opportunity if this market's going to pick up steam. If we see the elimination of the tariffs, and we see, peace in trade talks, and the global market starts picking up, and a lot of would-haves and ifs and buts and all of those, a lot of variables there, obviously. And I'm not saying it's going to happen, but the emerging markets are one of those areas of the market that can, get on fire. But obviously Turkey, Brazil, they're seeing something a little concerning from an economic perspective. And, we've seen that play out in the international markets all year long, and really kind of 2018, 2019. So not too surprising that Turkey and Brazil did what they did. Very quickly, just to kind of get people up to speed on other central banks, the ECB, Christine Lagarde, her first central bank policy meeting. And she didn't go dovish. She didn't lower the rates. She didn't talk about raising rates or whatnot. But I do believe her comments were taken dovish. She did talk about the need to review monetary policy, the need to review whether or not quantitative easing is to be expected long term within the ECB community. But she also talked about how all instruments are available to stave off any deflationary environment or global slowdown from an economic perspective. Swiss National Bank also came out earlier, and they basically kept their rates at the negative 0.75 range as well. And then obviously with the FOMC yesterday, Tim, I called you after I watched. There are some really funny moments, and probably unintentionally funny moments, but there was a couple moments during the presser yesterday where one dude asked about a 4% inflationary target. Mm-hmm. I just started literally laugh out loud, Tim. Laugh out loud. We've been talking about 2% inflationary targets for about
40 years,
100 years,
yeah,
right, at the central bank. And the central bank has talked about nonstop about how they can't even get to a 2%, right? Jay Powell literally just said that, it's been extremely challenging around the world to get in this environment, to get inflation to pick up into the 2% range. And immediately after he says that inflation's muted and it's very difficult to pick it up and yada, 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 some dude asked, but what about a 4% inflationary target? I just started laughing. And then at the very end, Tim, he said something. Somebody asked about the slack in the labor market, and talking about it. It's hot. And Jay Powell says, well, to make it hot, you need some heat. And I just started dying laughing.
First of all, one of the reasons
I just started dying laughing. I was like, are we literally watching Yogi Berra get up there and give a presser?
Forget Yogi Berra. That's a Mattism. I could hear you say.
Oh, no, it's absolutely a Mattism. Absolutely. It's like when I'm at an event speaking, I'll be like, okay, if you want to be great, you got to do great things. right? And that's immediately what I thought about. Okay. It's like swimming in a field of sharks. I was like, that's a Yogi Berra. Tracy Fasano, a good friend over there at Legacy that we work with quite a bit. She would call that absolutely a Mattism. So me and Jay Powell have something in common now.
Well, with all of that, I mean, the Federal Reserve, obviously the most important central bank in the world. ECB is probably second, right there behind it. Maybe the IMF. I don't know. I mean, the IMF has other, from a banking perspective, they do have a lot of power as well. But from a central bank perspective, Fed, then the ECB, right? You had two people that did not come out and raise or lower interest rates the last 2 days. Christine Lagarde, I actually was really impressed with what she was saying in what I read in the headlines. Now, to be fair, I did not see her presser. I read through the headlines.
I have not seen. I just read the article as well.
And she sounds like she's seeing some of the economic activity turning. Now, they always open the back door, Matt, saying, well, if the data confirms it, we are willing to take measures that we have to take.
Tell me the last time a central bank president, regardless of what they did with the interest rates, said the economy was bad.
Yeah, they don't usually say that.
Yeah, they don't use that language. It's like what the Fed said yesterday, Tim. Our economic outlook is good, but we're going to have a dovish monetary policy. So, you know, it's like they talk out of both sides. And the one thing that I took away from Jay Powell's presser yesterday is it reminded me of days gone by at the Fed, Tim. Mm-hmm. And what I mean by that is the whole philosophy. And I called you immediately after this. Mm-hmm. And I said, excuse me. And I said, Tim, I kind of felt I was watching Greenspan up there. I kind of felt like, let's say a whole lot without saying anything at all. And that's not what I've felt at like previous Jay Powell pressers, where he was very open and transparent with the questions. I didn't feel that was the case yesterday. I felt like he was just not wanting to really kind of deal with it any longer. And he was saying a lot, but he wasn't saying anything. And he would talk about how the need for an accommodative monetary policy, but the economic environment looks positive. The labor market looks positive. In fact, he was talking about how there's more lag in the labor market, right? Where you know, historically, if we get into the 3.5 to 4% unemployment range, you're talking about maximized employment at that point. And here's Jay Powell saying yesterday, well, no, we have more room in the labor market. We have these job openings in the labor market. The economy seems fairly decent, but we're going to still maintain a fairly dovish monetary policy. We're going to still maintain our repo actions. And there's a couple really good questions on the repo actions. We're going to still maintain our asset purchases at the Fed. And it's just like, okay, why are we doing all of these things if what you're saying about the labor market and what you're saying about the U.S. economy, if that is accurate, then why are we saying these things? Why are we doing these things? And the entire argument is about 2% inflation. That's the entire argument. And it's kind of like I feel politically sometimes where a certain politician will push the goalpost, will change the goalpost. And that's kind of what we're seeing here at the Fed. Whereas, you know, for the longest time, it was talking about maximized employment. And now we're talking about, well, we're going to do whatever we can to get a 2% inflation. And here's 70% of America like, oh, we don't want more inflation. So it's just, it was interesting, but it was a snooze fest, to be honest with you.
Well, and quite honestly, the market did not really react right after the Federal Reserve announcement, but the dollar has been actually showing a lot of strength here this morning, Matt, on the price action on the intraday. Dollar yesterday went down. Now it's kind of holding and now it's going back up.
I kind of see that the last 2 days. And this is why trading currency outside of scalping day trading is hard. And it's the truth. It's because yesterday we had the Fed, and the Fed comes out and they didn't go all dovish, but it was indication of dovish behavior coming out of what Jay Powell was talking about, what they did. So the dollar's going down. The ECB comes out and says, no, we don't want the dollar to go down. We want our currency to go down. So we're going to go even more dovish. So the ECB says, hold my beer. It's something we've seen many times in the last 10 years, Tim.
The race to the bottom.
Yeah, it really is. And that's where it becomes fairly difficult. I will tell you, and I know we usually start with the S&P, but the dollar is far more important when it comes to Fed actions and so on and so forth. You see this type of price movement coming down. You broke a very important support level at 97.2. but you have this 97 number that we've talked about in the past, and it holds it coming out here. The ECB comes out right there. You start to see the price appreciation coming back up into resistance right there at 97.40. So it's been a very difficult trading environment for currency for a while. And I truly believe that. And Cody, you're absolutely right. It's a race to the bottom. Like every currency out there, it's a race to the bottom. And guys, this is not new. This is 11 years in the making, this currency war. So it's just going to make a tough Forex environment.
Yeah, it has been a tough Forex environment. The volatility is definitely on a day-by-day basis is more for a day trader's aptitude. And if you look at this chart, Matt, it's even an ugly chart on the daily. I mean, you do have several bottoms down here at 97. That is support. That's confirmed support. But you also have an M pattern that just broke down, and you've got pressure here and a lack of clarity in 2020.
This is a technician's dream where they can find any pattern they want to justify anything. I mean, literally.
Yeah, like a Rorschach test.
Anything you want on this chart.
Just squint your eyes.
Justify any type of behavior. For me, it's kind of like oil now with the dollar. For me, it starts at 98.5 and it starts at 97. If you got to break down under 97, I think that's a trigger on the sell side. Outside of that, I don't see a buying opportunity for, and I'm talking more 2, 3, 4 day trade, not like a 15 to 30 minute trade. Obviously, day traders are going to trade what their systems indicate. But for any type of swing trade and any type of longer term situations, if you're looking to take a short on the dollar because of what the Fed is doing or economically, or whatever the reason is, it's got to start with the break of 97, in my opinion.
I'm with you 100%. Back on the S&P, though, let's talk about markets here, because the other real major headline today was out of Trump's Twitter account. They had a meeting of the minds of all the trade people. They had Trump's economic advisor committee there at the White House talking about trade because of this looming deadline on Sunday, Matt, where they were going to slap more tariffs on China. It doesn't look like it's going to happen. In fact, President Trump came out and tweeted right 5 minutes after the market opened saying, hey, we're very close to a big deal with China. They want it. We want it. It was interesting. The market is not carrying through on that, though. It did start to rally. Now it's backfilled. What was your reaction to the whole thing?
Just more boondoggling. I mean, it's interesting that the tweet does come out 5 minutes after the cash open. I mean, that is interesting. I mean, you can.
Was that random, do you think?
I do think sometimes we give Trump's Twitter account too much credit, but I mean, 5 minutes after the cash open, that you can make a clear argument that that's front running on that situation. But it's not just Trump tweeting that. I mean, the Wall Street Journal is reporting that there have been some concessions offered to the Chinese delegation. Number one, that the tariffs of December 15th will not be actually put forward. They're also proposing, again, this is according to the Wall Street Journal, they're proposing a 50% reduction in existing tariffs of $350 billion in Chinese goods. And I believe there was one other concession, but those were the two big ones. And yet, once again, we're asking for more soybean purchases. I can't talk more about soybeans. I'll lose my mind.
Yeah. No, well, I don't know. I mean, we could.
When did this trade deal become more about China just purchasing soybeans, though?
Obviously, it's not that. It's become that in the short term. I mean, that's part of the phase one deal is to have them purchase goods and show us a good faith effort and all that kind of stuff. They want the IP considerations. This is why the trade deal is so far from actually getting done, Matt. We all know that's not really what the trade deal is about. That's not.
There are also three other things that they were talking about this. In addition, there were three total things, two in addition to the soybeans. One was intellectual property protection. They want China to do a lot better job in regulating Chinese companies getting access to U.S. intellectual property, and rightly so. That is a very big issue for the United States. And the second thing is they want access to the Chinese financial systems to a certain degree that the Chinese have access to our financial systems. I mean, 14 of the largest banks around the world are U.S. banks, and they are very open to anybody around the world, and they want a little bit of transparency out of the Chinese financial systems as well. So things we're asking for are absolutely legit. I think it's a pretty big concession out of Trump, though. If that report is true, and it's like I was talking to Cody about in the pre-production show, anybody who has a good read on this trade deal, like anybody who says that they know what's going to happen, they're lying. No, I don't even know if Trump knows exactly what's going to happen with the trade deal, because there's variables that need to play out. I mean, Trump can't just say China's going to do this, and China can't just say Trump's going to do this. So obviously we're approaching some fairly quick deadlines here with the December 15th. There's a lot of fire around the market right now that a deal is being negotiated. I'm not there yet, but from a technical perspective, you did see the breakout of the S&P 500 setting an intraday all-time high at 3177. Breaking this down from an intraday perspective, Tim, you broke out, and then what happened is you started seeing it come down a little bit in the mid-morning action. It's retesting that breakout channel, as you can see right there at that 3150. It's retesting that breakout channel, and now you're starting to see price appreciation. It's going to be a fascinating day in the market. We are, in my opinion, we have not yet confirmed on a breakout. You got to see that close. That close has to be above that 3155 level. So as long as we close above 3155, you got to call that a breakout. Confirmation would be the continuation.
Yeah, and actually on an intraday level, you could even make a case for a day trade here on that pivot confirmation, Matt. That's a resistance, 100%. New support.
That's a day trading signal.
Definitely day trading signal, swing trading signal. We've got some potential here in the market today, and there's a lot of companies I want to break down. I'm looking across the different indexes, by the way. I do just want to make a note of the Russell. The Russell also is breaking out. Out of the four major indexes, the Dow, not a breakout. The S&P, maybe. The NASDAQ has to get some price action, Matt, but the Russell's looking very, very interesting up here at the high. Relative strength there. We've been talking about it. What's your read on all four indexes in the Russell?
It's same rate. I mean, S&P is already breaking out. The NASDAQ was slightly underperforming underneath its breakout channel. Still looking at that on the actual NASDAQ. Looking at the Dow Jones here, you're seeing the Dow Jones and the NASDAQ look a little similar. So if you're looking at the intraday strength here today, it starts with the Russell, S&P, very similar. Both of them are technically above their breakout channels, with the Dow Jones still slightly underneath the breakout channel. The breakout channel would be right there at about 28,187 is kind of where you'd look at it. Currently pinging at 28,0449, so you're underneath that. So if you're looking at trading that breakout, I'd look at the S&P, I'd look at the Russell here. But Tim, I got to tell you, I've been fooled on a few breakouts in this run. I'd like to see confirmation with some additional movement.
Yeah, I need them to close up here. There's no question about it. I'm not going to be taking aggressive trades here midday.
A close near the high, that would be an indication.
Yeah.
A close near the high would be an indication. A close near the breakout channel, we need to be a little bit more cautious.
Crude oil approaching 60. We've been talking about it. Not a lot of volatility in that. I did notice a report out of the IEA, by the way. They were saying that in 2020, they came out and they actually issued a report yesterday and last night saying that they think there's going to be an oil glut in 2020, that supply is going to stay strong. They expect to build a lot of barrels per day across the globe. And Matt, if the global economy is not great and you've got massive supply, I think a neutral rating on oil below 60, 62 is still very, very appropriate. Now, I know that's just an economic
OPEC coming out predicting an oil deficit too, though.
I know you've got mixed fundamentals in that regard.
Here.
Yep, you've got mixed fundamentals and mixed technicals, quite frankly. Short-term uptrend, long-term.
Honestly, Tim, that's what you just did is the argument you and Mark have had for a long time, right? It's the supply versus the supply deficit argument, and you know what's lacking? The demand argument, right? I mean, the Saudi argument is we will cut oil and artificially keep oil above $50. Or number two, you know, the IEA comes out and says, no, we got a supply problem, right? But nobody is saying where the demand is coming from. Like, and you can't be a strong buyer in oil on the sole solution of Saudi cutting oil. That you can be a buyer. You can be a trader, but that can't be the sole thing where that's what you're going to, you know, mark your grave on. That's the hill you're going to die on, is basically, oh, I'm an oil hawk because Saudi's going to cut, when there's a lot of concern about slowing growth and slowing demand. Sure. So you have the demand argument, you have the supply argument, but there's been no demand argument. I think everybody agrees that we're lacking demand. And the only argument for the buy side is you know, cutting of supply.
Bullish price action out of natural gas, by the way, today is
I'm still a buyer above 60.
I think there's a swing trade there for sure. I mean,
Yeah.
I think trader discretion would
I
come
wouldn't
down
be a
to
long-term hold.
no, I don't think so. I think it's a short-term trade, but
Yeah,
I
unless you're
do
doing like
think
boomerang and covered call and stuff like that. But
sure.
that's a
And cash
different
flow is always on
analysis.
the table. Natural gas, by the way, speaking of cash flow, we've been talking about support holding there. Another day where it is looking pretty good, backfilling, but still a bearish retracement. There's mixed technicals there. Just be aware that you've now backfilled into the gap and you've got the falling 9-period moving average there, Matt. You could make a case that's a bear setup, quite frankly. I don't see that. I don't make that case, but I would not be able to argue with a trader too much if they said they would short below a confirmation point.
Well, that's a gap fill is what that is.
Yep.
Right. And we don't see it at all. I think it's a lot of times I hear this a lot. Oh, it gapped. It's going to fill the gap. No, that it doesn't always do. It doesn't always fill the gap. But that is absolutely a gap fill. And now we're talking about natural gas at one of those moments that could be pretty important for traders that are looking at those credit spreads at $2 and under, or 210 and under 210 and those types of credit trades. I mean, that's at a pretty important resistance point. You got a lot of price appreciation coming into it, up close to 6 cents on the day. You're talking about 2.6% price appreciation, big green candle coming into that. And if you can reclaim that 230 level and stay above 230, I think those credit spreads are going to be perfectly fine. Now, even if we do start to see that retracement take hold, Tim, that doesn't mean 2.2 is going to break.
That's true. I mean, even if it did turn back down, you would have a test at support at 220.
Strong, bro.
My trading plan the whole time has been as long as 220 holds, I'm going to stay. And I think I'm going to continue with that. Your emotions get pulled into it. We've talked about this every day for a reason. Now, obviously, I've got this trade on. I find it very interesting. It's still within my system.
Half the time we're in the halftime report, we're talking each other off the ledge. Are you kidding
That's
me?
right.
We've been doing it for 14 years.
That's right. That's right. More in the metals market, by the way, we got to start with palladium. We'll talk about gold, but gold is not as interesting as palladium. Palladium has a winning streak going on that is incredible, not to be believed, quite frankly. I mean, if you look at that and you count the green candles in a row, this is a lot of price action for about a month now, Matt, where it has gone from what, 1650 to 1911 in the course of a month. Just incredible.
With no technical trigger.
None.
I mean, the only technical trigger
maybe the breakout
right here.
Yep, that's right.
Outside of that, there has not been a technical trigger. And I said this yesterday, it needs to be on a watch list. But Tim, when was the last time you saw an RSI that was pinging 100? I'm serious.
End zone. I put that one in the end zone.
That's the only one. It's the only one.
It's been a while.
Things in the end zone. I mean, we put healthcare in the end zone, and I was like, "What are you guys doing?"
Yeah.
Radicals get smoked in the market.
Yeah.
We're conservative. I don't know. I can't remember the last time I saw an RSI at 100. It's insane.
It's an incredible run. What a juggernaut. Very, very.
And I missed out on the entire run. Just give me a high base. Give me a flag. Give me a retrace. Give me something.
Give me an entry point. Right? Yeah. Gold and silver neutral.
Dragon.
Well, I call it riding the lightning. I like it. And chasing the dragon is not something you want to do. But when you're on the dragon, you want to ride that lightning. If you're in a trade there, Matt, let's say that you were.
Hold on, keep going on that.
If you're on the dragon, you want to ride that lightning.
On the dragon, you want to ride the lightning.
Yeah, let's say you made that entry point. You're not going to get out of it just because it's at a high point. You would not exit on strength.
No.
So ride the lightning. That's it.
So if you're going to chase the dragon, ride the lightning means play at momentum.
That means if you chase the dragon,
that means you're bar by bar. Is that what that means? Bar by bar? Right.
Well, that's a more technical way to say it, not a nerd way to say it.
But I just want to make sure that because sometimes we say these things.
Make sure the students understand what you're saying.
Yeah, sometimes the crew's like, what are they talking about? So if you hear me say chase the dragon and Tim says ride the lightning, we're momentum bar by bar. That's what that means.
I like it. I like it a lot. That's a t-shirt right there. There's no doubt about it. Gold and silver neutral, not much there, Matt. I don't see really analysis. I know that they're reacting to the dollar, but anything below 1,500 on gold and above 1,450.
Yeah, we broke this down in detail. I mean, it's just, it's the tough trigger. And like I said yesterday, and I'll keep on saying this, to me, I got to see the breakout of 15 and then it hold. I got to see it hold after 15. So that's kind of what I'm waiting on gold.
Some companies, though, in the news that I want to break down. GE had an upgrade. Now, I have famously had negative rants about GE for a very, very long time. I have problems with the company.
it's been years.
Years and years and years and years I've been ranting against GE, but
and guess what, Tim? You're still right.
I've been right, and I still believe in my premise.
I just want to make sure this is still a company that has, in a historically bullish environment, went from $32 to $11 in the last 3 years. Just because we got short-term price action doing whatever it wants to do in the last year, GE is still a bottom-feeding company.
I don't usually pay attention to analyst commentary too much, Matt, but I did find this guy's commentary to be quite interesting. I'll give you a couple of bullet points. Yeah. Basically, he believes in the new management turning around the company. And in 2020, he thinks that they've got a chance to get rid of some of their old bad debt and some of their bad business practices, that this new management team, he likes the narrative, he likes where they're going, and he thinks that they can do it. That's the only argument for GE. You can't look at the fundamentals and say you like where GE is right now, but do you believe in the management turning this thing around?
I don't know much about the management, but I'll just say this, Tim. You asked me what it would take for me to get interested in Boeing again, and what was my answer?
Need management to actually leadership. Yep.
New leadership.
Yep.
I go back to Walmart 5-6 years ago. Walmart really struggling, brought in new management. They went more to an online. They focused on online sales. They focused on rehabbing a lot of their existing, locations. They focused on, those neighborhood Walmarts, the green Walmarts and whatnot. And those decisions panned out really, really well. Leadership plays an important role. Why is Tesla up for the last 5 years? It's not because Tesla's numbers, Tim. It's because of people believed in Elon Musk. Why do I like Disney so much? I like Disney a ton, not just because I don't actually use a lot of Disney products. I mean, my family loves Disney, but I don't love going to Disneyland. I think Marvel's overrated. I think Star Wars could have been far better, and I'm nostalgic for the 1977 old Star Wars. So I'm not a lover of their products. You know who I love? Bob Iger. He's one of the best CEOs out there. Why do you love CRM? You love CRM,
Mark Benioff. I mean,
because we have a great respect for Mark Benioff,
for sure.
Right? Yeah. Leadership matters. And so and again, I haven't dove into the leadership of General Electric, but that does make me a little bit more interested, because we are talking about a company that's been downtrodden for years and years and years, 2 decades now, right? 2 decades of failed leadership. And so, and I forget what their CEO's name was off the top of my head, but when he left in the early 2000s, I mean, you had a glut of leadership for 18 years at General Electric, but it's still a company that is a foundational American company that's been around forever.
You're thinking of Jack Welch. I mean,
yeah, Jack Welch,
one of the greatest business
CEOs,
leaders.
one of the greatest CEOs in the history of the United States. So, yes, leadership absolutely matters. And if new leadership brings a new vision and they can eliminate some of their bad debt, start focusing on some of their positive assets. One of the reasons we hated them for so long because they were selling, good assets to pay off bad debt. Right. Yeah. So leadership can change things. Would that get me interested? Maybe.
Hey, by the way, to the students out there, that means don't close winning trades to keep up losing trades or to double down on losing trades. Don't do that. That's what they were doing.
I get down with that one too.
That's kind of kind of on their back end. And what they were also doing, Cody, is they were going into new strategies they had never tested that weren't a part of what their system was. So
also,
they were trying
something we don't teach students to do.
Yeah, as well.
The reason they irritated us is that they did everything that we tell students not to do.
Matt, they've had a good run. August till now. I mean, they're up 3.5 points. I mean, they were in that precipitous down trend and sell-off there in August.
Remove the name.
It's got reversal characteristics.
Okay, remove the name, remove the bias. Tremendous downtrend in 16, 17 coming into 18. Slows its momentum in trend coming into the back half of 18. You've seen a double bottom. Now you're seeing price appreciation with the potential breakout of 10, a retest of 10. You're holding the 9 EMA. Technically, you're sound here.
Yeah. Yeah, I would agree with that. But yet my bias still is there. I mean, you have to admit it sometimes. And obviously I still have it. I still look at their fundamentals.
I would rather buy Microsoft.
I don't believe in it. I think they're easier plays to make. Somebody else can play it and I can't criticize it if they're seeing it. I mean, I get it.
I don't think we can be too critical of that analysis because it's legit analysis. I mean,
I think so.
We listen, we're not shy when we find people, even people we like, being like, Yeah, that's bullshit analysis, right?
Yeah.
That's lazy analysis, right? We see it all the time, but that's legit. Leadership matters.
By the way, we've got a high watermark for the week watching live here on our halftime report. If you're watching the show right now and you get value out of it, give me a quick thumbs up. I mean, I've got over 80 people here watching live and only 24 thumbs on my screen. So let's make sure we get that up in the 40, 50, 60 mark, get those fib numbers where they need to be. Other companies, Matt, that grabbed my eye today, actually upgrades out of Starbucks and FedEx here. FedEx is seasonal play, usually about this time of year. Starbucks a tackle 25 stock. Upgrade, kind of a trigger there, looking great. I love that weekly. If you can get above 90, there's even more confirmation there.
Yeah,
it's a good fundamental company.
It is, and it's above 90. You could see confirmation for position traders, investors to, reestablish a position that maybe they've gotten out.
Yeah.
Hey, they got those peppermint lattes and things this time of year. You got to go buy those, guys.
I don't hate Starbucks. I think Starbucks is fine. I'm not an everyday Starbucks person. I drink Folgers in my cup, a pot of coffee for 30 cents. So that's me, Matt. I'm an at-home, work from home kind of guy. I don't need
tea going on right now.
I don't need a $5 cup of coffee.
This black tea, I like it.
This black tea cost me about 38 cents and it is delicious.
Yep, I'm sure it is. Sounds great, actually. FedEx showing me reversal characteristics as well. Had a little upgrade, starting to pick back up. They got earnings coming up here in a week, but they did get a nice upgrade. One stock I think we got to break down here is Apple Computer, AAPL, if you can. And I saw a report that I thought was going to be a negative report, and it was initially negative, Matt, where they had a 35% year-over-year drawdown on iPhone shipments to China. Effects of the trade war here. The market started to sell it originally, but then it held. Break down this chart if you can.
The chart's very simple. You're forming a high base. If you remove the information from the equation, you just kind of look at this from a well, let's not do that. But if you just look at this from like a technical perspective here, if I can get my drawing tools to work. Oh, I must have clicked the wrong button. But if you could look at this just purely from a technical perspective, you tested the breakout right here earlier this morning, Tim, and then it sold off on that news. I've been seeing a growing trend in Apple iPhone that having less revenue impact than other areas of their company. Apple's done a wonderful job in trying to focus on, other than just the iPhone, iPad sales to kind of, the cloud-based systems. You're talking about the, iTunes and, their Apple store and, micro-dosing financial transactions and so on and so forth. I don't think the Chinese news is that big of a deal, just given the fact that we knew Apple for a very long time was prone to this with China. Mm-hmm. So I don't think that's that negative of news. And if there's going to be positive trade news, Tim, Apple's going to benefit out of that. So it sold off on the overnight based on the news. You recovered that based on, the trade war being reduced, or trade war risk being reduced, I should say.
Yeah, a little price action here on the intraday looks interesting, though. I mean, if you did break back out above 272, where's the trigger here, Matt? Because that tail was kind of like that one blip, And so if we were tackle trading coaches, we were submitting this for the scouting report on a Friday afternoon. It's approved. We say, okay, yes, you can play the breakout. Where's confirmation here?
Confirmation. I'm not worried about that tick.
Me neither.
Confirmation starts above 271.50.
Yeah, I think so as well. Other companies that
that doesn't mean you put an order at 271.50. That means confirmation starts there.
That's right. That's right.
And a lot of traders, and probably wise traders in this environment, would wait to see confirmation and then trigger above an intraday level after that.
Lululemon had earnings yesterday. They are actually a very interesting chart, in my opinion. They did gap back down, but into the bull zone, Matt. And when you've got a one candle gap down, sometimes what can happen is over the next week, this will settle itself in and then give me another trigger point.
Well, and that's what Lulu does. Mm-hmm. That's what Lulu does. We've seen this play out on Lulu before. Gap out, comes back down, fills the gap and runs. Gaps down, finds support and runs away. And, I was watching CNBC yesterday, and I was listening to Josh Brown, who I feel has tremendous analysis. And he said that this watch Lulu, watch it come down, find support, recover, and his point was, he wasn't looking at it technically like we are. He was talking about, where else in this space are you going to find a company like Lulu? Mm-hmm. If you're looking at investing in this space, where you're going to find a company, this is a retail stock, where are you going to find a company that's done that.
No,
Not in this space.
no.
Right?
And actually, the numbers were pretty good. They beat EPS numbers. They raised guidance for next year. They had a lot of positive things to say, Matt. A 5% move. I mean, this is within their MMM projection. That's just the market.
Yeah, I got them beating EPS at 96 cents versus 93. Not a robust beat, but a beat nonetheless. Revenue 960 million versus 895 on the expectation. Again, not a massive beat, but a beat nonetheless. And guidance, I had them slightly increase guidance with a little bit of December warning, but I had them slightly increasing guidance. Obviously, this has just been just a juggernaut for the last couple of years. And because even though the numbers beat, they didn't beat with such veracity that the market loved. Maybe all this was just people locking in profit off of a historic run Lulu's had, Tim, in my opinion. Watch it find support. Maybe support starts at 220. Maybe it starts at 210 where it came into the 50-day moving average. I do see a lot of evidence on that 50-day moving average over the course of the last 18 months on this stock. So keep it on a watch list. Wait for, you never catch that falling knife. And that's what Lulu's doing today, down 5.5% so far. So you don't want to just jump in the water. I mean, that's ill-advised, but put it on a watch list, watch it find support. And I'm almost certain at some point in the near future, we're going to have a prep trade on it in one of the scouting reports.
Yeah, I believe that as well. It definitely belongs on a bullish
most likely
watch
not
list.
This week, most likely next.
Yeah. Many other stocks, Matt, Tackle 25 stocks. There's a bunch of them that are grabbing my eye today, but just bring up one here. JP Morgan. I want you to take a look at this stock. Really an incredible move here up at the high point. Just a juggernaut. It is riding the lightning. It is if you chase the dragon and you're riding the lightning here, Matt, you are very happy.
Now you're just trying too hard because that's not what this is doing. JP Morgan was high basing. You just broke above the RSI at 70 level. Big movement on the stock here today. A lot of momentum, wonderful stock. And I'll tell you what, JP Morgan's not being removed from the Tackle 25. I've been breaking it down this week in the middle of my research, Tim, but JP Morgan is one of those stocks that will be a stock that is maintained on the Tackle 25.
Yeah, and Starbucks, we talked about ExxonMobil actually looking pretty good. We don't usually break down the energy stocks because they've been neutral for a long time, Matt, but I actually like
any trades on it.
I like the reversal characteristic here. If you're looking for a dividend player, one of the biggest energy companies in the world, forget Aramco, who has all the complexity with politics, international markets, and all that.
They did hit 2 trillion intraday.
I saw that. I was
going to say the Prince got his 2 trillion.
He did.
Yeah, the Prince got his 2 trill. Yeah. Now everybody can sell and lock in the profit and watch everybody else lose their money.
I would take ExxonMobil though. Come on. I mean, we're talking about a company that has better regulation.
Oh, you're asking me if I would take an American energy company over a Saudi Arabian energy company?
I'm not asking. I know the answer.
A company that has more regulations versus the royal family that can change it at any heartbeat that they want to.
Literally.
Yeah.
I'd rather make no money on growth and just capture the dividend and write out a covered call. It's not even hard.
I'm with you.
I'm with you. And Saudi Arabia my money. Are you kidding me?
Oh yeah, don't get me started. You're going to trigger a rant.
Do I look like the type? Have I ever sounded or looked like the type of guy that would give Saudi Arabia money? No,
not to me. That shark in the background confirms it to me. Boston Science, by the way, take a peek at this stock, Matt. Option report Canada. We talked about it last Friday.
25 stock as well, and once again another stock that will not be removed from the Tackle 25. I just want to show people kind of very quickly, Tim. I don't know if this is the right spreadsheet and if it will even come up, but I had an indication of some of the stocks that weren't being removed. But Boston Science is one of those. That breakout's legit. Breakout of a high base, 44 trigger, currently pinging at 44.60. Could play it above the high of the day with momentum, but beautiful breakout so far in Boston today.
Looking great. And by the way, just a quick note for everybody out there. Last thing.
And nobody liked the clown. Like literally nobody liked the clown. People were getting all paranoid about the clown.
Yeah, it freaks us out, Matt.
Very few people like being scared. And
nobody likes it. They don't like, what is it? What is the guy's actual name?
What are you talking about? Pennywise.
Penny.
Nobody likes Pennywise. It's a Stephen King novel about a killer clown.
I haven't seen the new one. I just watched the Stephen King one from 30 years ago. It's fantastic. Terrible acting. Fantastic.
C'est la vie. I will not be rewatching that one. I'd rather watch Deliverance again right now, by the way, than that show. And that one's also terrifying as well. A lot of companies here, Matt, but we do need to make note. There are 4 companies tonight. It's not earnings season, but we've actually got 4 companies that have earnings tonight. Adobe, Broadcom, Costco, and Oracle all reporting. These are companies of size, of note, importance, in my opinion, and the EPS numbers are going to come out. I think this might be the market story tomorrow, is breaking down these 4 stocks.
Oh, I'm sure we'll be talking about trade. But yes, what we will do is break down these 4 stocks, because these are, I mean, this is kind of the last hurrah of this earnings season is coming in later on tonight. So, you know, obviously Costco, Adobe, Broadcom, Oracle, all very important. I'm gonna throw it to you. Which one are you mostly interested in?
Well, those big brick and mortar retail stores like Costco that have an online presence as well have been some of the leadership in the market. I think it might impact some other stocks I care about quite a bit. So I think the actual earnings number out of Costco is the one I'm going to be most interested in. Adobe is a stock that is really fascinating. They've had a good run the last month and a half. I like the characteristics up here. And from a technical perspective, Matt, a breakout up there at 313, I was interested in playing potentially, you know, post earnings kind of thing. What about you? Which one are you looking for? Broadcom? You're on mute.
My dogs were barking, so I had to go on mute for a second. For me, it's Costco. I mean, Costco is one of those stocks, good covered call stock. I like the company, and I still think that breakout of 306, 307 could be tradable. So I don't know if it can get there. Costco is not one of those stocks that moves a ton on earnings. So I am interested in it to see kind of if it can reclaim, you know, this breakout channel. It almost broke out, and that was going to be a pretty good trigger. So Costco, I am interested in. Adobe, I'm not saying anything negative about the stock, but Christian and Jessica have influenced me negatively on the stock. So anytime I ever bring up some type of something I need that maybe Adobe might be able to provide us, like Christian and Jessica, Adobe's terrible. We hate using their products. They're right. So I'm a little bit unjustly influenced there on Adobe. So I never really get that interested in it. Broadcom here, obviously breaking out here today. You're looking at after market hours. So if we can confirm that breakout on Broadcom, get a little bit more price appreciation. I would have loved it if it wasn't up 1.6% today and it broke out on the news. But Broadcom, I'm interested in definitely tomorrow. And then Oracle here, could it break out of that 57 level and reclaim coming 60? We'll see. So yeah, so I'm interested mostly, Tim, in Costco, Adobe, and Oracle because they're in the breakout channels that could be tradable.
I agree. I think there's going to be some interesting action tomorrow, some stocks that we're going to be analyzing for sure. But what we're going to do for the rest of our show here today on our halftime report is actually go through our Thursday game here as you're bringing that up here, Matt. Is that the spreadsheet?
That's what I started with.
Gotcha.
That's what I started with. Greener ones I'm going to research. White I'm still researching. So that was that. And then there's this one here. And this is my broken down one. And these are the final candidates for all 4 of our list. So these are the final candidates. And we'll be meeting on it later today to continue breaking down them from a fundamental perspective.
I love it. I love it. And obviously, that's always a big thing at Tackle Trading when we release the new version of the Tackle 25. Our audience, our students, they all get excited. Let me just give you some
numbers from the Tackle 25 year to date. Year to date, we have 23 winners and 2 losers year to date. Okay. Now, obviously, the market's been bullish this year, but I will put up a 92% hit rate against anybody in the world. That's number one. Number two, 25% growth performance on average, 25% growth rate on average. That does not include the dividend. That does not include the cash flow expectation on the covered call. That's simple growth rates. I mean, Tackle 25 is on fire this year.
Dude, really incredible performance. I mean, and you were even quizzing me, hey, Tim, what's the number 1 performer on the Tackle 25? And I think this was the one question you asked me I did get right. AMAT was a huge.
Applied Materials.
Applied Materials just had a great run.
And Tim, you know what's fascinating about this? And the thing that stood out to me was it wasn't even the numbers. It's what goes behind the Tackle 25. These are not high yield growth companies. These aren't high PE ratio companies chasing yield. These are value companies that, to even be on the Tackle 25, you have to meet 11 fundamental criteria, and a lot of those are about valuation. We don't chase yield on the Tackle 25. There was, in fact, I remember last year talking about putting on defensive companies because we were a little concerned about the market. Love the performance of the Tackle 25, and I'm very excited for the next edition.
Absolutely. Absolutely. Cody,
Hey, Matt, real quick, before we go to the game, got a question in chat, which I think is a good question to address, is who has access to the Tackle 25, Matt?
Everybody has access to the list. All pro members have access to the list. Okay. But the system is a paid system, and I believe it's like pretty cheap. It's like $195 or something like that.
I think $297 retail. I'll have to look it up. $197 usually is where we have it on a discount, which is where it's at right now. I believe I'll confirm that.
$197.
Yeah.
It's a 2-hour system that teaches people how to use the Tackle 25. Kind of like the STEP system is an 8-hour system designed to teach people how to use the scouting reports. So we'd like to keep everything mostly free to our pro members, but I mean, got to pay the bills too.
Absolutely. We got to play our game. I want to play the game, Cody. I don't want to answer 50 questions. I want to play the game. I am excited about the game. I enjoy the game.
I was just letting him know I'm dropping a link to the list for him. That's last year's list. It will be updated this coming year. I was just letting him know that he should absolutely, as a pro member, have access to that list.
Beautiful.
Yeah, they should have access to the
maybe not the course, maybe not the mastermind group, but the list he should have access to.
Well, the list, it's not just the list. There's a massive PDF and all of that and whatnot. And we do a lot of free videos for our pro members for things like this, but for the actual system, yeah, that's a paid system.
Beautiful. Cody, set it up. Set it up. Do not make me delay anymore on this. Do not reduce my satisfaction of playing this game for as long as I choose to play it. Set up our Theta relationship Thursday.
This is the flip coin of the opposite side of the coin of our rapid fire. Rapid fire is we are giving you our 5-10 second take on a technical formation of a company you're looking to swing trade. This is the opposite side of that. This is a company that you're already in, you have a long-term investment with, or a company you're looking to get into a long-term investment with.
So we're either talking, are you looking to divorce, get counseling, or get married?
Exactly. We're looking at you want a relationship or you have a relationship. Where do you go with the company you want us to look at?
So if you're looking at the investment, do you bring her home to mom?
Yeah, okay. That's the question.
Or if you're in the investment,
you just talk to your buddies about it. Okay,
sure,
I got it.
Yeah.
Yep. There you go. So guys, if you have any stocks you want us to take a look at on a longer term frame, on more of a fundamental type breakdown, those are the companies we need you to put in the chat right now. And we just got our first one coming in from Jeed of Shop.
Let's do Shopify. Let's take a look at it here.
Shopify.
I'll take this one first. We actually talked about this one in the halftime report quite a bit last week when it was breaking out and showing confirmation. We absolutely just crushed this. We talked about it every day as it was happening, as it was carrying. Now you got a little high base here in the short term, but let's think long term, relationship. If you're in a relationship with Shopify, you got to be happy. They've been performing. They've been there for you. They've done great by you. You're not going anywhere in that regard. Relationship Thursday, this is an easy one. You've got a great partner here in Shopify. It's not a short-term analysis, but it's been a great performer, Matt, for a long time.
Yeah, I don't have much to add to that. Obviously, this is a growth stock and not a value stock, and it has been performing extremely well up until just recent history where it got a little overextended, had a negative earnings report, came down in price, but it really held that $300 level, and that was important for Shopify in my opinion. It tested it multiple different times, held it multiple different times. And so, yeah, you got to be happy. You're not getting divorced out of a company you've been extremely profitable in for the last 3, 4, 5 years. Looking at it from more of a fundamental perspective, and that's just coming up here, but looking at it more from a fundamental perspective, I don't care about that. It's not coming up. You're not going to love the numbers was my point, but it's a growth company. Yeah. You're never going to love the fundamental numbers from a growth company. You believe in the company long-term. You believe the path to profitability. You believe it. You want to be a part of it for the next 20 years. And if you believe Shopify is one of that scenario, you want to stay in. Now, do you lock in some profit along the way? There's nothing wrong with that. right? But in terms of getting divorced, absolutely not. Shopify has been a performer.
ADP is next from Crispino. Interesting. Let's bring up ADP if we can. Matty, you take this one. Look at that stock.
Oh yeah, again, another very now again, if you're already in the stock, do I see anything in the technical chart that leads me to a conclusion that you should be getting out? Absolutely not. Stocks are going to do this, guys. Don't overreact to short-term volatility. ADP, when the market was sky high earlier this year, it was kind of tracking the market over the course of the last 6 months. It's kind of held its neutrality, but you've never once violated support on the weekly chart. You're still above the moving averages, and what you're forming on the weekly chart is what's called a continuation pattern, a cup and handle continuation pattern with a potential new trigger above 175. So, from a longer term perspective, no, you're trolling up stop losses underneath weekly support levels. If you're looking to get married to it, I mean, you could do far worse than buying a breakout out of a continuation pattern.
I think relationship therapy Thursday, and I don't even know the answer to this, but aren't we assuming these are relationships they've already been in the past?
I don't know.
I think so.
It could
like
be
therapy. It's not like should I propose, right? It's more like
so.
All
right, so there's no getting married.
There's no new marriage here.
Already married.
They already have a relationship with.
Okay.
Yep.
You guys have played this game more than I have.
Yeah. Well, it's evolving as well, and so
it's evolving.
Yeah.
I mean, because sometimes, what if you are looking to get a relationship? Maybe we'll have those one day.
Should I propose Sunday? No, we're not doing that. But I will say this about ADP, Matt, one quick note to add to it. I quickly looking at the sales number, 2015, 16, 17, 18, and 19, their sales numbers have been going up year over year, about 8 to 10%. So they're consistently performing. What a good looking stock. This is easy. I mean, if we're the therapist that has to have two happily married individuals come in and say, hey, our marriage is great. What advice can you give? These ones have been softballs.
This is easy. I mean, look at the earnings per share numbers, Tim, over the course of the last 5 years.
Yeah.
2015, 289, 2016, 325, 2017, 385, 2018, 467, current 2019, 543. There's nothing to see here from a fundamental or a technical perspective. I mean, the PE ratio slightly high at 31, but it's tracking its 5-year average at 29. Current revenues are up, net income's up, earnings per share is up, dividend per share up, book value per share up. What else do you want here?
Nothing. I mean, Microsoft, same thing. And by the way, I'm going to reiterate, and I'm just going to say the same thing.
Say yes.
I'm just going to say, yeah, looks like you guys are happy. Microsoft's looking good.
Microsoft, you guys are in a very, listen, I'm going to say this to Mohammed. You're in the most successful marriage that's ever existed.
Ooh.
Literally, you're in the marriage that everybody else looks at and like, man, I wish we had that marriage.
Right. So I'm going to bring up a couple of the complex ones.
You love one another. You give a back rub every night. It's happy. I mean, why are we even analyzing Microsoft?
There's not a single couple
jealous of Microsoft.
There's not a single couple on the planet that gives a back rub every night. But
if you're invested in Microsoft, you are.
Maybe. A couple other ones. I'm going to actually kind of cherry pick a couple here, Matt. We're not going to go through all of them here in the chat. I do appreciate everybody in Team Tackle popping them in here, but give me FCX. This one might be a little bit harder. You've had some rocky times the last couple of years. The relationship was great for a long time, always a consistent earner, dividend payer. Now it's starting to show some light. I think for me, if I'm the therapist on this one, I'm going to say you already rode out the rough times and things are now starting to look in your favor. I mean, reap the rewards, right? I mean, you've already rode through the problems.
You've been in counseling for the last couple of years because you've been in debt. Debt's really been impacting your marriage. And, we know that, what is it? 55% of Americans end in divorce right now. And the number one reason is financial concerns, debt concerns, whatnot. And this was a couple that for the last couple of years has had some financial issues. I mean, in 2015, they lost $11 per share. In 2016, they lost $3 per share. But, you're starting to fight back. In 18, $1.71, and currently you're about 7 cents. And you know what? There were some external forces on this marriage, Tim. There were some external forces on this marriage, and those were external forces we could not predict. The big red dog of China came in, and FCX has a tremendous amount of risk exposure to China. So if we are seeing a little bit of positive trade news, and obviously, you know, FCX has been beneficial off that, that's a great thing. You also saw the double bottom. Your marriage found support right there at about $8.50. You double bottom, formed a W formation. You reclaimed all the moving averages, and you're starting to see price appreciation. I'm going to say you fought through the tough times. Enjoy the good ones.
I'm with you there as well. A couple other ones that are grabbing my attention, I think that might be more complex. We're going to bring up Stone, STNE. Now, this is a company we've talked about a lot this year on the halftime report, quite frankly. It grabbed my attention when Warren Buffett added it to his portfolio. That's when the whole market started taking off with it earlier in the year, Matt. Then it fell out of favor because it ran too far. You got an IPO company a year ago, you know, so it's a new relationship that
you got married off one date. What are we doing? You went out with the guy for one date. He opened the car door and you're like, let's get married. That's what it is to buy an IPO. I don't even want to analyze.
Kind of like a shotgun marriage, maybe. I mean, you
yeah,
you were shotgun married. Warren Buffett just shotgun married you into this company.
My wife actually watches a show called 90 Day Fiance.
Oh,
that's
God.
Literally all day.
This wasn't even a 90-day fiance. It was a 9-hour fiance.
But if you're in a relationship now and things do have potential and they're not exactly killing you here, Matt, maybe you see how it goes for the next year.
You need to analyze the crazy hot skill. I can do that.
Hey,
you're not out of the running right now. Okay. You don't have a relationship right now. You have a fling where you've been traveling the world, and some days it's been fun and some days it's been ugly. I don't know. I wouldn't be married to Stone. I'd trade it. I'd date it. There's no doubt, but I wouldn't be married to it.
I think if you are in a relationship with Stone, you got to continue to work on that relationship constantly, because you probably don't know each other yet, quite frankly. And there's a lot more growth.
You should be married to it.
Well, if you are, though, maybe you got to try to figure out if that's a long-term play.
So you
I like the
one
company.
Day, you got it pregnant. You got to figure it out. Is that what you're saying?
I guess.
Okay.
All right. And maybe last one here, Matt. I think this is an interesting one here. MasterCard. And we didn't get to all of them here, guys. I do appreciate it. I'll talk about that in a second. But MasterCard, this one's been just an easy one forever. Short term starting to hesitate, not really breaking out here in the last 6 months. Credit card companies, they've been juggernauts for years, though. This is an easy one, don't you think? You staying in this one?
Yeah, this one's just looking at Microsoft saying, man, I just wish we could be that good.
Yeah.
Like they give each other a back rub every other day.
Right. Yeah, I think so as well.
But they have fantastic finances. I mean, earnings per share 336, 369, 447, 552. Current year to date 667. Chart looks clean. Breakout of 293, maybe even 300. Looks clean as well. And the credit cards have been on fire. I mean, if there's one thing Americans love, it's debt. And if there's one thing they love using, it's credit cards. And if there's one thing credit cards love, it's the average interest rate of 15% in a Fed fund rate of 1.5%. You do the math, MasterCard runs.
Ooh, last one. I'm sorry. I know it. I said last one last time, but I like this one. Work. Slack. WORK.
Should we get married?
Yes.
Should we get married?
Ooh, this is a tough one for Tino. Great question. This is one where you've been interested, right?
Listen.
You've started to put the feelers out there, maybe even had a date or two.
Tim, I'm going to open her door, but I want to see her unlock my door.
Okay.
What move did that come from?
I'm going to open her door, but I want to see her unlock my door.
It's
Mary.
It's a gangster movie.
I know exactly what it is. It is a Bronx Tale.
It is a Bronx
They
Tale.
actually turned that into a Broadway play. Did you know that?
I don't, but I could see it being really, really good. That was a great movie.
Yep.
I'm there. I'm there. I know we had some volatile, rocky times on the dating scene. Things have smoothed out. We've met each other's family. We like each other. But I got to see confirmation. I got to see more. Got to go on a few more dates. Got to give it a little bit more time frame. But I got to see more. But again, I'll just say this again. We've looked at work quite a bit this week. Breakouts are important. Confirmation is important. For me, on everything here, it starts with $23. On everything, it starts at $23 for me. Now, if 20 is broken, and we see double bottoms at 15 with a potential breakout of, $18. Maybe that changes the analysis at that point. But as of now, with $20 holding and 23 being a very important resistance level, this to me is we're still going to date. We're still going to do it, but we're just going to wait for the marriage proposal until we see a breakout and confirmation to see some brighter days ahead.
Cody, what about you?
I'm with that. I can see a potential long-term relationship with work, but I haven't seen the things that make me want to propose yet.
I love The Bronx Tale, by the way. Now I got to go back and rewatch that movie.
Oh, it's a great movie.
Absolutely a great movie.
By the way, what is his name? Trick doesn't work any longer since everybody just has automated. But
Chaz Palminteri, was that his name? I think that's the guy who was the gangster.
Just Googled it. Just
no, I didn't Google it. I didn't. No, I'm thinking about it. I think it was Chaz Palminteri. And wasn't Robert De Niro the dad?
De Niro was the dad.
God, I gotta rewatch that movie.
De Niro was the dad. It was. I haven't watched it in 20 years, but I still remember.
But you remember the door trick? That's always good. I like it.
It is.
Yeah. All right, guys.
I was trying to find an analogy that worked, and I just the first thing that popped into my head was the Bronx Tale.
I liked it a lot. I'm with you on Slack, guys. That's Relationship Therapy Thursday. Matt, you like the game?
Yeah, it's a fun game.
It's kind of a fun one, I think.
Now that I kind of figured it out.
We're learning it as well. It's kind of evolving the last month or so. I kind of like it on our Thursday games. Guys, we're going to be back tomorrow with Friday Frank, the tank day. We always do our coach's mailbag on Friday. And I got a special request from Team Tackle. If you have a question you would like to be featured for tomorrow's mailbag, send it to me at team@tackletrading.com, and I'll start to compile a few of them and actually be ready for the show tomorrow with those questions.
Real quick, everybody loves Coach Frank, right?
Yep.
Everybody loves Coach Frank. You've seen the movie Old School, right?
I have.
Okay. When me and Frank were college roommates, and the first time I met Frank, he reminded me of Frank the Tank. I'm just going to say that. The very first time I met Frank, about 12 hours later, I was out cold because he had hit me with a 25-pound like plastic container of laundry detergent right in the face. And he says, hey, Matt. And I turn around, and all of a sudden, boom, right in the face. And I kind of shake it off, okay? Kind of shake it off. I'm like, what are you doing, man? He's like, you're just laughing. I'm like, all right, he's my best friend.
I've got other stories about you and Frank that we could tell on the podcast. Maybe
we're not going to tell the time we were crawling up the river. We're not doing that one.
All right. Always, Listen, and obviously,
Tim, everybody's got college stories. Me and Frank have ours.
Who's more liked in our community, Gino or Frank? I think that's a tough one. Those two are right up there as some of they're the talent. People love them. I know our halftime crew loves those guys.
Good people.
Well. Yeah.
I mean, they're just really, really good people.
Guys, if you're watching our show and you've not done it yet, give me a quick thumbs up there on the show. If you're watching the replay later, which, by the way, most of our audience actually does watch the replay, there's always a link in the comments below where you can sign up for a 15-day trial, come be a part of Tackle Trading. And I've got one last request for our audience out there. On a Thursday, Relationship Therapy Thursday, if you know there's somebody out there in your life that you think could benefit from being in a community like Tackle Trading, why don't you play matchmaker and send them the link to this show and invite them to come and join us on the halftime report each and every day. Great job, Matt. Great job, Cody. And by the way, we missed my rant on the Economic Policy Institute, but maybe we'll talk about that on the podcast.
Let's talk about it on the podcast, Tim, because it's amazing data, right?
Oh, God.
On how wealth is kind of defined and created through the 401k system, and how not everybody gets the benefit of it, how really the top 10% of the people at the top of the market get the massive benefit of it, and how most people, even despite they have a 401k, they have not participated in this historic market in the last 10 years, and how they've underperformed in their 401k for 10 years straight. I mean, the simple reality is they should have a tremendous amount more money, but one of the problems was where they were investing that money.
Well, and you and I, we know it very, very intimately. We've been working with clients and a lot of people on a one-on-one basis out there teaching financial education for years and years and years, Matt. And we do see a stark difference between how people perform in their 401k and how people use the 401k. And not everybody has one, by the way. One of the things the Economic Policy Institute pointed out, only 50% of workers actually have a 401k.
Well, and one of the things that we're doing as from an economic perspective is we're going more to part-time. We're going more to contract work instead of, type of employment. A lot of that is because of the cost to hire somebody. It's simply cheaper. And we're not even talking about the benefits. We're talking about, employment tax and other things, other regulatory, red tape that we have to overcome from a business perspective. In fact, I was talking to one of my people today. I'm like, listen, I'd love to put you on an employee, but it would just simply, I can't. I can't. Like, we'll pay a higher than average cost, but we're not going to. It's just there's too much red tape, too much regulatory nonsense that you have to overcome. So I understand that, but to me, the problem is access to certain things. I mean, from a long-term perspective, I really kind of see it quite simple. Either index, growth, value, that's about it. Mutual funds aren't there.
No.
Right? Not with the introduction over the last 20 years of ETFs.
That's
I mean,
right.
people just pay way too much in fees. They underperform the market. And then 10, 15, 20 years later, they're like, oh, I've had this 401k. I've been getting my company match. But it's like, no, you don't get that same benefit. And I believe that research, and I can't believe the research institute that put it out there.
The Economic Policy Institute, it's a nonprofit.
It's nonprofit, nonpartisan too.
Yeah.
I mean, the data was amazing, and we'll have a conversation about it on the pod.
I'm looking forward to it. Guys, we'll be back tomorrow. Great job today, everybody. Always appreciate it. We'll see you tomorrow in our halftime report.
Later, everybody.